Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, July 19th, 2017. This is the fifth of 5 videos today that I plan to do. I may follow up with some more in the next day or two if I come across any compelling sectors or industries that stand out. But what I wanted to do in relative close proximity, meaning in one day, I was originally considering one post having all these videos. I think that's too much. So in one day, I got out there really the five of the sectors that appear to be either currently offering objective long or short entries or setting up for that. So earlier today I covered the energy sector, then I did gold and the precious metals and mining stocks. Third video was on the cannabis stocks, which are on fire right now. Then home builders, which was the one sector that I clearly see is setting up for a nice short entry, swing short trade, regardless of what the broad market does. If those trend lines and those chart patterns trigger, like I said, I can do bullish or bearish analysis all day long on a stock or a sector, but if that chart pattern or those certain buy or sell triggers don't trigger, then you don't have a trade. Sometimes the charts just dissipate. Bearish or bullish looking chart patterns can dissipate if prices do not continue to play out the way you think they will. So now let's just look at commodities. Mainly I wanted to focus on the ag commodities. As you guys know, that's been my focus lately. That's been what I've been trading, putting up a lot of. But I have also mentioned energy, and I covered oil and all that in another video. But here's natural gas. And I'm doing this just because I'm on my commodities watch list. This is a whole watch list of various commodity ETNs. There's UNG. And again, they don't track exactly with the natural gas futures or spot price, but they do a pretty good job. And you can see here on UNG, it's setting up. It looks like a bottom in this one, or at least maybe poised for a rally. So natural gas looks pretty good, and I did not cover that in my earlier energy video. A couple others to look at here. Here's coffee, Joe, the ETF. Had this divergent low. Again, all these have been covered in detail recently, but what I wanted to highlight here is these charts continue to play out, and that means that the bullish case for a rally that I've been talking about, it strengthens with each step here. We had a little flush out move, strong candle reversal. That was bullish number one, bullish technical event number one. The fact it came on a strong, a divergent low, that also was bullish. Then we broke out of this minor downtrend line, had a little flagging action there, since broke out, and we took out this downtrend line as well, pretty well-defined downtrend line. So it's already hit and exceeded that first target and looks to be good up to this target zone right here. At least. And again, the case can be made on a lot of these ag commodities that a long-term lasting bottom is in. I haven't looked at this in a while. Here's a weekly chart. Let me just get rid of this fib. Again, I also like to look at the actual, the continuous futures contract or spot commodity prices, particularly when going back long-term on a weekly chart. But what I'm seeing here is coffee prices putting in a powerful divergent low on the weekly time frame, and I think the case can be made for a the bottom in a vicious bear market in a lot of these ag commodities. And even if it's not, we caught this. This was an official trade. You can go back, check the archives, go into the ticker drop-down box on the front page and look at Joe, and you'll see a trade back here. We caught the bulk of this run, not all of it, but this ETN ran up over 100% in very short order, and we were long down right at the bottom and got out officially there. So my point being, bear market rallies are very powerful things, and what's nice about a bear market rally is prices go up faster than they do in a bull market. The run might not be, it's not what a trend trader or a long-term investor wants to participate, but a swing trader, because prices are so beat down and there's so much short covering and everything else, you tend to get explosive rallies. So we could be looking at that here in commodities, guys. Don't think just because, they've had some decent moves lately, the run is over. These guys seem to be bottoming, and we'll only be able to say that in hindsight, with certainty, once the charts confirm that a new bull market is in place. But my point being, despite the long-term bullish outlook, the near-term technicals are very constructive, and I see more upside in Joe. Next one up. I mentioned, and I didn't cover this in the energy sector video, but I've highlighted gasoline recently. UGA is a gasoline ETF, and there's a downtrend line. There was a divergent low. We took out price resistance, downtrend line. I think I just covered this yesterday or the day before. It's up another 2.26% today. Corn. Corn again seems to be basing, looking good. This is a big, basing pattern here. We're still within it, but we continue to find support here around that 1850 level. A few momentum overshoots, whipping through there, but that last one was on a divergent low, so that's bullish. And that was we had a strong run, ran up, hit my first target, almost to the penny, and turned back around. So, this is why multiple price targets exist. You can, if you're long term, just hold on, buy within this range, wait for breakout with a stop somewhat below it. And if you're a trader, you want to buy towards the bottom of the range, either sell at the top of the range and or raise your stops and wait for breakout, because sooner or later we'll have a breakout, especially if the rest of the grains continue to rally. They'll probably bring corn prices up with it. Let's see. Soybeans, SOYB, just an explosive move from this, divergent low, bullish falling wedge near vertical rip. I did an update last week saying these guys, the grains were all a little too stretched, and I'd prefer to see a pullback or at least some consolidation. I mentioned that price can, overbought conditions, prices can correct in one of two ways: time or price. Time is what we had here. We had a very quick pullback that dropped, 5% in just a couple days, but it came back down, not all the way to this support level, but close to it. And so far it seems to be moving up or holding on. Hard to say if the correction's over or not. I mean, we really won't know in hindsight till that previous reaction high is taken out, but I still think this one looks good up. In the bigger picture, you see these lows back in 2015, 2016. We had a divergent low there and a huge rip. We have a similar pattern here, but we're also at that low level. And again, remember, these are commodities. These aren't companies. When a company starts going down the tubes, fundamentally, the ultimate end path for a company, if they can't turn things around, is zero. They declare bankruptcy, the current shareholders are wiped out, and the shares are worthless. You're not going to get that with commodity. There's always going to be a value for soybeans and wheat and corn. And as the world gets bigger and there's less arable land, ultimately these things are going to be worth a lot more down the road. So again, I jumped out to a 2-day chart there. You can see that near double bottom pattern. We go to a weekly chart, and it's constructive all the way around. So this is a sector that I think is good for either swing traders or longer term investors. If you got in here right, you can set a stop to assure at least a break even. You can raise stops along the way. This is a nice support level here. I'll highlight it just in case the correction's not over. There's price support back here. I mean, a lot of support. You follow that orange line I just colored to the left. You have a gap there, numerous reactions there, numerous here. And, commodities are choppy. Soybean prices get a little choppy. So you're going to see candlesticks slice through and from. But what you want to look for is the bulk of the reactions around there. It doesn't have to be that we bounced off that level exactly. So I see, again, we may never get there. So if you're waiting for a pullback to that level, you might get it. Who knows? Smash through it. But if we do get it, that'd be an objective level. And if not, you can continue to hold on to your position, add on, scale in. And again, if you're looking at bigger picture, like this run back here, soybeans, so just this ETF alone had a rip of, 30%. And we have similar technicals now. And at the high so far, it only went up 13.6. And right now we're only up about 10%. So about a third of the way from where that run went. All right, JJG, that's the grain ETF as I covered, and this one pulled back right too. I would have probably highlighted this the other day in my video when I said the grains were stretched, maybe time to book some profits, buy back. I probably would have highlighted these two levels or any of these lines, but you can see it hit the lower line. That was my lowest support level pullback target, very well defined. Again, those lines are there for a reason. You can just see all the reactions at that level there. Reactions back here, reactions from above, and it doesn't get any better than that. If it fell so quick, sliced right through. It never even touched that second support line. So it fell to that first one, gap down below the second one, hit that level, and now we bounce so far. So that one, it's still probably not too late to chase. I don't know. Maybe it'll hit that level again, maybe not. But again, long-term chart looks constructive. And that's, again, the grains ETN. It holds corn, wheat, and soybeans. So you can, kill 3 birds with 1 stone if you'd rather trade JJG. Here's sugar. Just series of divergent highs, correction. You can see it here. It's this is my trading style. Look for these divergent highs. Look for the divergent lows. We had one there. It's not shown on that chart. It's to the left of the chart. Divergent low, huge rally. Divergent high. You can see the divergence. I didn't label each one. Correction. Divergent low, rally. We did have a divergent high, didn't draw it there, but you can see it. Now it is. There's the negative divergence. Price is making a higher high, and boom. And we were in a bear market at the time. It may still be, who knows? But that's why these divergent highs prove to be. I was about to say better shorting ops than the longs, but no, not really. Over the last couple of years, this is a 2-year chart. That rally was every bit as it was about exactly that one. It was actually a little stronger off the lows. So, but that's it. There it is. Wash, rinse, repeat. Look for these divergent lows and highs. Look for trend line breaks as your entries, because divergence in itself isn't a buy signal. This one, as I mentioned, divergence was on the RSI. It burned through on the PPO. The PPO made a little lower low, but we still had positive divergence there. And we're coming up on those targets. And there's still a lot of upside, in this one longer term. You look at it from a 10-year weekly perspective here. I don't have this chart mocked up. There was a descending price channel here we fell out of, but sugar prices are beat down. That's for sure. They're near their historic lows. Wood. I didn't cover this in the home builders ETF. I showed you the comparison of the timber ETFs, both wood and CUT. I showed you how nearly perfectly correlated they are to the home builders, and I made what I believe to be a very compelling case. The home builders are poised for a correction or considerable drop. They haven't triggered yet. They're still in an uptrend, waiting for those sell signals. But if you're a futures trader or you want to trade these ETFs, wood and cut will go down right along with the home builders. I can all but assure that. When the home builders break those support levels I covered earlier, you'll see these bearish rising wedge patterns or these primary uptrend lines break. So I already covered. Did I cover wheat? No, I think I jumped ahead. Here's wheat. That the yellow lines really show you the big bullish falling wedge, confirmed with positive divergence, everything you want to see. Breakout has just been, a very nice run, 20-something%. If you're trading futures, obviously your move's a lot stronger because of the leverage. But this one is pulled back. You can see this is one of the former resistance support levels now, and we're just about there. And I'll tell you, I think this one's starting to look good now. We got the pullback I was looking for in the grains. This whole area is really a support zone, so I think one could step in there. I'd really have to look at the 60-minute charts to get a better picture. Hard to say. We could get a little more corrective action in these grains, so I can't tell you they're screaming buys, but I can tell you, as I said, they've already corrected more so in price than time. Now, whether they want to hold these levels for a while, it's possible, but the history that we looked at these charts a minute ago, a lot of these things, once they break out, the moves have been very impulsive. It just seems to be the nature of the beast with these commodities. They're very momentum-driven trades, and they work off supply and demand dynamics, obviously, like everything else. But then you have the institutions pile in, start trading the futures contracts, and that tends to bid the prices up beyond what the supply dynamics are. So supply-demand dynamics. DBA, that's the Agricultural Fund ETF. Covered this one the other day. Series of downtrend line breaks, divergent lows. Those are your buy signals. This one back tested, ran up. Another bullish falling wedge breakout. There was a trade op. Descending price channel breakout with another swing trade op. And now 3 consecutive divergent lows. This was the third and a series of divergent lows. Very explosive move off there. We had this flagging action. This line I must have drawn in the last video the other day, saying that the next buy signal will be a break above this bull flag pattern. You had the flagpole right there, which is the distance from the sharp move up to the top of the flag. You add that to the bottom of the flag, and that gives you your projected or measured target, which in this case happens to coincide perfectly with a resistance level I already had on the chart. So we'll just color that green. So there's a potential target. I also mentioned that I have a pretty solid resistance level here, 21. So that might not be a bad place if you don't want to try to milk every bit of this run, assuming that that bull flag continues to play out. And finally, that leaves just 2 more NIB, which is cocoa. There it is. This one's trying to pound out a bottom, it appears. There is divergence. I like that. You see the positive divergence. That's a common theme with a lot of these ag ETFs. This one's been grinding around this range for a while. So ultimately your buy signal comes, once we clear the top of this range, either this level around 2670, 2560-ish, or to be safe, that previous reaction high back here. And if that happens, that would be a powerful signal, since that's a basing pattern, and then that could send cocoa prices quite a bit higher. Hard to say. I can't rule out another thrust down on cocoa. And keep in mind, just because these are agricultural ETFs, they all have their unique supply and demand dynamics. They're grown in different parts of the world. There's all different types of issues with storage, capacity, weather patterns, that affect some areas and not others, and therefore, lead to crop shortages or surpluses. So, it's not a one-size-fits-all thing, and that's why I like to go over the individual commodities and be selective there. Cow is the last one. This is a livestock ETN. And negative divergence, divergent high. It's stalling out at this resistance. Here's an uptrend line, which my guess is that uptrend line goes, especially if I'm right on the grains, because if the grain prices go up, that's an added cost to the farmers to feed their cows. And we'll probably pull back to that, at least that level there. That's about 22.75. And again, if you're a futures trader and you want a second opinion on a futures chart, just drop me a line in the trading room. I'll be glad to do that. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.